Hi traders, welcome back. In this video, I'm just going to be showing a quick trade that I took today. This is my trade on September 3rd, New York Open. It was actually long after the Open here. Just to give you an idea, again, I like to just go through the motions here, so I'm going to keep showing this. So I knew we were at a significant level here. If you zoom out to the 15-minute, even the 1-hour time frame, these levels are played off of quite a bit, right? We've got bounces here, here. Looks like it pushed back through here, bounce off of that level there, there, rejection off of that level. This is a very significant level, right? That's the long and short of it. So I knew going into this New York Open we were bound to play off of those significant levels. That means we get good price action, and that's what this strategy is all about. So this is also with my indicator fully turned on. This is how I'm trying to use my indicator to help me trade better. That's the whole point of the indicator, right? So I'm actually setting up for only A-grade setups, and I'll walk you through that as we see one come up. But I'm into, as you can see, I'm into overbought territory on all four stochastics. I have this guy here. I'm going to zoom it down just a little bit. While volume is not tremendous today, we still have pretty decent respect of that volume. So I'll go ahead and start playing this here. This was about the time that I started paying attention and watching for these overbought conditions to trigger something. You can see that I did have a single bar close. I'm going to stop it right there. I had a single bar close below the EMA. That is a normal entry point, but I need a couple of bars, right? I don't enter with just a single bar down. Now, funny enough, I let this play a little bit too much because the next 2 bars back, or 2 bars forward, I should say, we have a bearish divergence from there. But I'm a little too late on my entry, as you can see. We would already be down to 52, 49, somewhere in that area at this bar. That is not a good entry, even though all the other conditions now match. So what we typically look for there is a little bit of consolidation around that 9 EMA to tell us it is serious about dropping to that level. And you'll watch these stochastics tick back up, get into overbought conditions, and then my indicator is looking at least 10 bars back for a divergence. Okay, so we now have our bearish divergence here. We have a wick down, close down. This is an A-plus setup. Everything about it looks perfect. Here is one key thing that my indicator doesn't quite get right. And I'm going to play it how I played it in the market today because I used the indicator and not my visuals quite as much. But we're not back into that overbought conditions, right? I'm going to go ahead and take this trade again as I took it today. So I'm going to sell 10. This is just 10 minis. 10 micros, sorry. I think I am on minis. Anyway, and then down to this level here, somewhere in that area. This was a longer hold, so I'm gonna bump this, 137 to 1,000. That's a pretty decent risk to reward ratio. I think I was at 150 though. I think that's what it was. And this one turned against me a little bit. So I just want to let it play here and show you what this looks like. Wasn't extreme by any means. You can tell it's consolidating. Ooh, that was really close. It might have been 150 actually. It didn't tick me out. And now we start into it closing below the EMA, the 9 EMA, and you're going to watch it respect that EMA from here on out. So as you start kicking through these different levels that the indicator adds, you could scale in a little bit, right? And this would be the perfect point to scale in right there at that. I'm going to back up here one bar because I actually did this. So as it started ticking down, I knew I was actually safe. Dang it, I hate it. Sorry. I forget that this trading view replay, when I have an open trade, if I tick back, it just removes my trade completely. So we won't do that again. We'll go to 10. We'll do our sell here. You get to see this in real time again. I think I was somewhere in that area. I actually did enter on the candlestick up, the bullish candlestick back up after this. So that's why I've got that stop a little bit higher than the first round. Let's click through this really quick. Yep. So now it got to where I would actually scale in a little bit more, and I sold another 5 there, and I moved my stop down now to about the same level that I was already risking, 150. And that way I'm still minding my EMA here. I'm not risking a whole lot more, but I am making a whole lot more if I get down to this level. Now this did take several minutes to play out here. I'll tell you where I exited, and this is another mistake that I made in this trade because I should have stayed in a little bit longer. I ended up exiting right where the indicator told me to, which is fine. Nothing wrong with it. But you'll see where that ends versus where this actually is here. So right here, I see this green bar. I'm a little concerned it's starting to pull against me, and it pulls against me a little bit harder. That was pretty much my exit, was probably that candlestick there. The indicator actually kicked off a B level entry right here on this candlestick, right? Because it now closed above the 9 EMA, and that was my indication. I don't have B signals turned on right now, so I think that's where I closed it for about $1,000 profit. So that's all. I just wanted to show you that quick little A+ setup. Again, correct entry is not quite where the indicator would have it be, but right here at this bullish candlestick at 11:06 a.m., where we're actually just into overbought conditions on all 3 of these stochastics. The 4th is also overbought, and you can see how it carried all the way through the 5-minute stochastic till it hit oversold conditions. That's the perfect setup. That is what you're looking for, is enter when all of those stochastics are up into overbought conditions, ride that 5-minute wave all the way down to oversold. And if you notice here, my other stochastics tend to stay in that oversold. They don't really get dangerous as far as hooking back up. And that's what you want. Thanks for watching today, and I'll see you in the next one.